do it by your own choice, and if it's not your primary aim in life, and if you don't regard it as a moral virtue. On those conditions, it's fine to help people if you want to.
Why can't I think of it as a moral virtue? I mean, can't I take some vows for myself for doing all these good things?
Because that would be cannibalism. Because that would mean that you preach altruism, which means not merely kindness, but self-sacrifice. It means that you place the welfare of others above your own, that you live for others, for the sake of helping them, and that justifies your life. That's immoral, according to my morality.
I don't understand why you have to be so harsh in your evaluation of those people. Why call it immoral? Why don't you just say, why don't you say it's a waste of time? Why pass judgment on me?
Because look at the state of the world today.
Yeah.
And you cannot be harsh enough on those who created it. And those who created it are the philosophers of altruism. It's those who preach self-sacrifice, selflessness, self-abnegation, all the anti-self theories, which means anti-man. All those who demand man's sacrifice. They have succeeded, and look at the results of the world.
That's a theory or a way of life or a philosophic idea which is advanced by religions, that we should sacrifice for others.
That's right.
All right, I want to make sure I understand you, Miss Rand. Why is it so... I'm still not quite sure why you're so harsh on those who would sacrifice for other people.
Because I look at them. Just look at them. Because they don't hesitate to sacrifice whole nations. Look at Russia. Communism is based on altruism. Look at Nazi Germany. The Nazis were more explicit than even the Russians in preaching self-sacrifice and altruism, and self-sacrifice for the state, for the folk, the people. Every dictatorship is based on altruism. Now you can't fight it by merely saying it's a difference of opinion. It's a difference of life and death.
Good afternoon. Welcome to Green Bicep. Signal, no noise. Oh, drop my bagel. You like that? So, what to consider? The objective here is to highlight what should be considered before investing. And this is educational. We want to just help folks out, experienced or novice. Number one, have a written plan or thesis. This is critical. This will force you to think about what you did not think about in your head. So write it out. It's just not like looking at printing out pieces of paper from a printer, but actually write it out, think it out. And this will help you immensely. Try it, you'll be surprised. Two is follow the money. Have a few key individuals that are in the market that you follow. And as you follow them, you start to understand what gives them their edge. Ideally, you're following people that are successful and have done it well in multiple bear markets. So follow the money, follow the key people. Use fundamentals. What does that mean? Well, ultimately, fundamentals are looking at specific metrics that are innate to a specific company. For me, return on invested capital or return on assets is key. Ultimately, a company will generate cash flow, hopefully. So we're just going to simplify here for novice investors and say a company has revenue, expenses, and then profit. And that profit turns straight to cash. In reality, there's a little bit more nuance to it. So that cash is the cash generated from that company. Well, you take that total amount, free cash flow, operating cash flow, we'll call it, and you divide the operating cash flow by total assets, right? Boom. You do that every quarter, compare quarter, or ideally annually for 5 to 7 years. You'll see a trend of how efficient a company is taking their profits and reinvesting them. Companies that perform best over the long term have a high ROA, all other things being equal. We'll get into other metrics in other videos, but that one alone will keep you out of trouble. Obviously, valuation comes in play here. Like, you can't just buy any company, but the thing is, if if the company has a low ROA and it's not an event-driven play, yeah, it probably will underperform. Technicals look at price ultimately. I mean, there's a lot of different metrics, but the way I see it, price is signal. So if you see the price of the Chinese yuan going up and the price of gold going up and the price of the US dollar going down, that means there's some sort of signal there on money moving, big money flows to make currencies move like that. And so those could give you an edge. So what I like to use is Super Trend is the name of the indicator. It's on tradingview.com. And it just, in general, gives you an idea where trends are broken and not broken. And something I look at, it's not like the thing I use. I mean, I look at fundamentals, technicals, you name it. I look at everything. That will give you an edge. Review short interest. In general, when stocks have high short interest, it means there's something going on behind the scenes for institutions or a few institutions to target that institution. I'm not going to get into what short interest is, but the fact is I look at short interest, and if you're getting into a stock with a high short interest, that should raise a red flag. Something is going on. Obviously, with the short interest, though, you could look at an opportunity. If you're a trader, you get stocks with a high short interest, they get squeezed out, people start buying in, the shorts have to cover and the price goes up. But there's a lot of strategy to that. But here our goal here is the preservation of capital and have a game plan. Review of debt. There's different types of debt, but when you invest in companies publicly traded, most of them have publicly traded debt. So that debt market is a way to get a proxy of how healthy the company is. So you could look at IBM and see what their bonds are trading at relative to par value. So when the bond is sold at the maturity date, it'll be at par value, say it's $1,000, and say you bought a 10-year bond and you're in year 3 and it's trading at $950, I would consider that pretty healthy. So you want to look at that. If you see a bond trading at $500, then you know there's an issue fundamentally, and why would you ever want to buy their stock? So unless you're just, yeah, it would be very dangerous to do something like that. So review the company's debt. Debt is typically when companies go into bankruptcy, there's a thing called the fulcrum security. It's the most senior debt, and those individuals or institutions that own the most share or percentage of that fulcrum security typically will be able to work with a judge and turn the company the direction they choose, and they could wipe out the equity holders, the stockholders, if they want or not. It's yeah, so debt is really king, owning bonds essentially. Find your edge. Ultimately, this means over time you'll find something that you're good at. Like when I was in New York, there was a guy that was focused on movies. He would watch the movies and he was trying to develop a hedge fund based upon that strategy, and maybe that worked for a few years and doesn't work today, but there's always an edge for a specific market. Like when the VIX is high, when volatility is above 30, typically stocks will close those gaps within 10 business days. So that's just trading strategy in itself when the VIX is above 30. So there's always a different way to find your edge for that current market cycle, and every cycle is slightly different. Do not fight the Fed. This probably should be at the top. And ultimately that means when the Fed is raising rates, you don't want to be buying too much, because ultimately costs are going to go up, cost of capital, and the market gets squeezed out, capital goes away, hard to get debt. Companies that have high growth cannot get new investors, or they can't get new debt, issuing bonds, and it just becomes a cycle because cash becomes tight. And so do not fight the Fed. We're in a raising rate environment, so you want to be conservative right now. And that's it today. Short and sweet. Well, not totally short, but I hope this helped a little bit. I'll have more follow-up videos. I could probably do each topic and spend several hours, many hours or days on each one. Yeah, I definitely could. So we'll see. Maybe I'll break each one of these down, but at the same time, this is going to be a category of what to consider. I'll probably have multiple videos, and maybe I'll make these sub videos of that. Yeah, so I appreciate your time. This is Green Bicep. If you like the content, thumbs up on it. If you don't, any commentary is appreciated, so I know what to tweak. And obviously my audience here is there's a mixture. Like I'm dealing with, I want to teach new people stuff because I think it's important, but at the same time, I know that some more experienced folks are likely following me. So I'm just going to mix it up. Yeah, that's just the way I'm going to do it now. And maybe I won't have the greatest growth, but you know, that's just the way it is. Green Bicep out. Thank you.